All right, so let's get started. First of all, let's thank North San Diego County Realtors for bringing the class to you today. So uh, always great to have them getting you all the most recent updated information, and that's what we're going to do today. So hidden listings in reverse is what we're talking about. And why do I call the class that? I don't know. After doing these loans for a while, probably about 16, 17 years, I've seen where realtors actually probably have an opportunity to do some business with older homeowners because the question of the reverse mortgage was asked or people have reverse mortgages. So we'll get into what I mean about that today. We will take a little review of what's happening with reverse mortgages. Our industry is definitely having changes because of interest rates, just like regular loans are. So I'll talk about the current lending environment. We'll refresh ourselves how a reverse mortgage works. And let's kick it off with what I've been, especially been learning the last 3 or 4 years since interest rates started going up. So when interest rates go up in our industry, or even regular loans, right? This increase in interest rates is, well, it's making changes that we don't necessarily like. And one of those changes is that less older homeowners are getting loans. Financing is harder to get nowadays. And so when I noticed over the last few years that less clients were getting loans, reverse mortgages, regular loans, equity lines, and they really need to get cash out of their houses, I was, well, what happened to those clients after they left me? What happened after I couldn't get them a loan to get cash out? So a lot of them end up selling their homes. And so then I started looking at data a little more closely from the National Association of Realtors. And here's their studies. The actual last 2 years running, 60% of the homes sold were by somebody 58 years and older. The average age of a home seller right now is 60 years old. So our older homeowners are selling homes, they're moving. And I got to tell you from my experience, not all of them want to move. Some of them are moving because they're in a position where they have to get some equity out of their homes or they got to be closer to family members. So I just thought this is something interesting. And I'm sure you probably all know this, but there's more older people selling homes now than there are younger. Your 50s, late 50s, and early 60s, those are the majority of the home sellers right now. So who would have thunk that a lot of people that said they would never move end up moving? So let's talk about what I think is important for a realtor to know about reverse mortgages. This isn't a commercial for reverse mortgages, right? Like the commercials on TV, like, oh, I get all this money and I get to spend time with my family and all these things, and my worries are gone. Like, sure, that's good for a consumer to know, but I think there's something much different for realtors to know about reverse mortgages. And so there's four things that I think are very important for you to know about reverse mortgages. And the first thing is that a client asking about a reverse mortgage seldom has been dreaming about getting a reverse mortgage their whole lives. It isn't like they're saying, I'm so excited I finally get a reverse mortgage. I just turned 62. Not really. When a client is asking about a reverse mortgage, they're basically saying, I'm a homeowner and I need more cash flow. There's equity in this home I need to get to, and I can't because it's stuck in my house. So I got to get financing. Well, so when a client is asking about refinancing a home or what a reverse mortgage is and they're retired, it's not because they just want to go out and do another loan. A lot of times it's because they need to get better cash flow. Well, what you should know about that question right now is that a lot of people asking about loans and financing or reverse mortgages are not going to be able to get those loans. In our industry, when interest rates go up, how much we can lend drops. So higher interest rate means less money out there. And of course, that's the same for like a regular 30-year fixed. People that try to get money out of their homes find that the higher rate prevents them from getting a cash out refinance. Well, in our world, those higher interest rates mean I'm lending less money, and specifically a lower loan amount. So when someone goes to ask about a reverse mortgage, I have to look at interest rates to determine what their loan amount is going to be. As of right now, probably only 35% of the people that ask about a reverse mortgage will actually get one. A lot of the other ones can't get them. So you have 65% of the people that are asking about getting cash out of their houses can't get it. And so many of these people, in my experience, I've found after I tell them, sorry, I can't get you any money at our house. There's really no financing that's going to help you. Many of those people that I have just told that to start thinking about selling their homes. Because there's one sure way to get equity out of a home or to increase your cash flow, and that's to sell the home to be able to capture that equity. So this is very important for you all to know that a lot of older homeowners are trying to get access to cash. They need cash flow. Interest rates are causing loans to be prohibitive in terms of trying to get cash out. So it's turning them into sellers. Well, when somebody sells a home and they're retired, getting a new home loan can be a difficult process. I mean, underwriters and lenders are pretty tight right now. So if you're going to get a regular loan, they're going to want to see income. They're going to want to talk about credit scores, and income in retirement is not that high. So now you're an older homeowner. You're thinking, I got to sell my house because I got to get some equity out. I want to be a homeowner. Now I got to go get a loan to buy a home. Well, one of the things that we have that can be helpful for an individual that's older is we have a reverse purchase loan, and we qualify totally different than a regular loan. We can give people loans to buy homes, and maybe they can't get any other financing. So again, this is another important thing for you as a realtor to know. For a lot of older homeowners that maybe thought they couldn't go out and buy another home due to financing, we have this tool that we're going to learn about that they could probably get financing. Okay, there's a lot of houses with reverse mortgages out there right now. It's over 100,000 houses in California here with reverse mortgages. I think there's like almost 60,000 reverse mortgages in Southern California. So I got to tell you that those reverse mortgaged homes, you might think that there's no business there because a client has a loan, they don't have to make a payment on it, they're not going anywhere. Well, I got to tell you that actually it's a lot different than maybe you think. People that have houses with reverse mortgages, they do sell those homes. And later on, I'll tell you why they sell them and how you can figure out which ones they are. And the other thing that happens with reverse mortgages, when homeowners pass away, those heirs inherit the homes and they often sell the homes. Well, sometimes it's just not that easy. Sometimes heirs have a hard time getting control of that property from a reverse mortgage lender. So I'll tell you all about that because there's another way that you can be part of that process and help yourself to get a listing. So let's go through these four things real briefly again. Why is it important, I think, for realtors to know about reverse mortgages? Well, number one, clients asking about reverse mortgages are really looking for cash flow. Since I'm doing less reverse mortgages these days because of higher interest rates, somebody asking about a reverse mortgage may ultimately be a listing for you. Also, reverse mortgages are out there. There's a lot of them out there, and there's business there for you. You just have to have a little idea of how to go out there and find it or what to look for. And so that's important as well. Also, remember reverse mortgages, we're lending less money, so less people are getting loans. All right, let's review what a reverse mortgage is real quick. A lot of you might already know this, so let's try to buzz through this. A reverse mortgage is just simply a loan on a home, right? It's like a traditional loan. You're simply borrowing money to buy a house or refinance a house, right? That's what you do with a regular conventional loan. You're just letting a lender put a lien on title and they're lending you money on your house, and your house is collateral. And every month you pay that lender back a little bit each month. That's how a regular loan works. A reverse mortgage, almost the same. You're just borrowing money to buy a house or refinance a house. You're lending a lender put a loan on your title, right, for collateral. Except the difference is with the regular loan, instead of paying it back a little bit every month, a reverse mortgage, it's going to get paid back all in the end of the loan. So a client can get a reverse mortgage. They get a statement every month. It shows how much they owe. It shows what the amount of interest was for the month. If they say, I don't want to send in a payment this month, I want to keep my money in my pocket. Well, that interest that you would have normally paid if it was a regular loan, instead what we do is add it to the balance. So if you owed 300,000 and the interest for the month was 2,000, you said, I don't want to pay that. Next month, you'll owe 302. You'll get a statement. It says you owe 302. And so we just keep doing that. A client could actually send the money in if they wanted to. It's up to them if they want to have the interest added onto their balance every month, or maybe some months they send a payment in. We don't really tell them what to do. It's up to them. But the one thing we do know is after they've had the loan for many, many years, let's say they made some payments, they skipped some payments, they just did different things with their loan. Whatever they do owe when the home is sold or refinanced, that's when we get paid back and we pull our lien off title. So you can see we operate kind of like a regular loan in that we're just lending money, we're just putting a lien on title. A regular loan gets paid back a little bit every month. A reverse mortgage is going to be paid back more like a lump sum when the house is sold or refinanced. Now, a client can have a reverse mortgage for a long time. There is no end point specifically for a reverse mortgage. I mean, there is, but it's kind of silly. It's 150 years old. Nobody's lived to 150 with a reverse mortgage. So because of that high age limit, really people can stay in their house with a reverse mortgage for their entire life. That could be 40 years. Who knows how long it could be. And if they don't make a payment, we don't care for entire 40 or 50 years. If they don't make payments, we're okay with that. Their balance, remember, is just going up every month because they decided not to send the payment in. I said, instead of sending a payment this month, why don't you just add that to what I owe? So a client can make decisions on their loan every month. How do I want it to run? Do I want my balance to go up this month? Do I want to send a payment in? It's up to them. But they know one thing, no matter what they do during the life of the loan, no matter how much they owe, no matter what the house is worth, no matter what interest rates are doing, house could be upside down. Maybe we're going to a deeper housing session. They get to stay there. And then they just get settled up when they pass away. All right. Here's a biggie about these things. One of the reasons and one of the foundations, one of the cornerstones that I think has been part of the reverse mortgage industry and why we've been around for so long is clients can just get reverse mortgages and maybe they can't qualify for any other financing. So if you need to buy a house, but you can't qualify for a regular loan, or you want to refinance your house to get equity out, get cash out, but you don't qualify for a regular loan, many times we will end up helping you get a loan done. So the ability to have financing, buy and sell homes, get cash out, etc., when no other mortgage will qualify you, but we will, is one of the reasons why reverse mortgages are around. One of the reasons why they'll be around for a long time. So a client that maybe could have never qualified for a regular loan, there's a good chance we'll give them a reverse. Now, if they don't like the idea of their balance going up, remember, they can just make a payment on it if they want to, and they can treat it like a regular loan and pay it down every month. So it doesn't matter to us how people run their loans. Whatever it is you got the reverse mortgage for, you do with it. But at least you had the ability to qualify for one. So, like I mentioned, we're giving less loan amounts these days. And why that's a problem, we'll learn on the next slide, is that I have to be able to pay off whatever you owe to give you a new reverse mortgage. Now, if our loan amounts are down right now, then many people are saying, Ryan, I thought I could get a reverse to pay off my loan, but you're telling me I can't get that much money? I'm like, yeah, because interest rates are up. You see, if you think about how a reverse mortgage works, every month you get your statement, it shows how much you owe. It shows what the interest due for the month is. If you don't want to pay it, remember, we don't care. We'll just add the interest to what you owe us. But if interest rates are higher, then the interest due is going to be higher, right? I mean, that's with every loan. And so we're concerned because if interest rates really went up fast. And so that means we're adding a lot more interest right to the loan. And so if interest rates are higher, and so therefore the amount of interest being charged is higher, we need to lend less money. So that way that interest being added on to what they owe doesn't get too big too quick, because we don't want the house to go upside down. We're a non-recourse loan, which means we lose money if the house is upside down. So what we do is we say, wow, interest rates are high. The amount of interest we're charging is going to be more. So we're going to start by lending you less money so there's more room to add that interest on through the years. So that's why we lend less money when interest rates are higher. We have to make room for the interest to add on that a client decides not to pay every month. Back to my bullet point here. Because our interest rates really dropped quite a bit, I've just been having more conversations with clients about selling their homes, even when they had no intention of selling their homes. They were just going to stay in that home the rest of their lives. They would just refinance, get equity lines, get reverse mortgages, but that's just not as easy to do anymore. So they become, right, begrudgingly, they become a home seller. They become part of those 60% of the homes that are being sold. Somebody over 58 years old that's decided to sell a home, even though maybe they didn't want to. So a good old regular refinance reverse mortgage, let me run through that real quick, because we still are getting these for people, just not near as many as we used to. So when a client wants a reverse mortgage, let's say they say, Ryan, I want a reverse mortgage. How does this work? And I'd say, well, the first thing I'm going to do is I'm going to ask how old you are. Because the older you are, the more money I give you. I'm going to look at interest rates. The lower the interest rates are, the more money I give you. I'm going to look at the value of your home. The more your home is worth, the more money I'm going to give you. So those three factors determine how much to lend. So let's say I have a 76-year-old in front of me, right? They're probably going to get maybe a little less than 50% of the value of their home. Let's say they have a home that's worth, I don't know, 900,000. And they said, Ryan, I want a reverse mortgage. I'd say, okay, your home is worth 900,000 based on what interest rates are today. $900,000 home, you're 76. I could probably get you maybe 430. And so that's a decent chunk of change. If they owe 350 on their house, cool. I can get them enough money to pay off their first mortgage of 350. One thing about a reverse mortgage is when we do it, of course, we got to pay all the other liens and everything off title. So as long as the loan amount is big enough to pay off their current mortgage, I can get them reverse. So in this case, I pay the 350 off the client owes. They were approved for 430. They have 80,000 left. And they can say, Ryan, what can I do with that 80,000? I'd say, well, you can do a couple of things. If you don't want it, you don't have to take it right now. You can leave it on what we call the guaranteed line, which means you can always come back and get more if you want later. You don't have to take all the money out of a reverse mortgage right in the beginning. Whatever is left over after you pay off your current first, you can just leave behind on a line of credit. And that's nice because until you use it, you're not being charged for it. It's guaranteed to be there. Even if your value of your house goes down or something changes, that money is guaranteed. So that's a nice savings or emergency fund for the rest of your life. And you get your statement every month. It's going to show, remember, we paid off the 350. It's going to show you have 80 available. On the side that you borrowed 350, remember, we're going to show what the interest amount is. If you decide not to pay it that month, no problem. Let's just say it's 2,000. Next month, when you get your statement, it'll show you a 352 because you didn't pay the interest. We don't care. Remember, you can do that every month for the rest of your life. On the side that shows 80, that's guaranteed. If the value's gone down or something's changed, 80 is available. You know how much you have available. And that's the way the reverse mortgage statement will work, and that's how it's going to look. And so a refinance reverse mortgage. So how much less am I lending? I think that's just important for you all to know that because remember, a lot of people asking about reverse mortgages may have gotten a quote a couple years ago and they think, yeah, I'm just going to go back and get a reverse mortgage. And maybe they're talking with you about that. And they say, oh, yeah, I'm just going to get a reverse, you know. And you got to maybe not ask them, but you got to internally think, I wonder when the last time is they checked on rates. In 2025, a 75-year-old, the house a 950 value, I would get them about a $559,000 loan amount. That's about 68% loan to value. Sorry, 58% loan to value. So 3 years ago, I would lend somebody that was 75 years old about 58% of the value of their home. How about nowadays? Oh, pardon. I'm moving too fast. Let's continue on the left-hand side. So if they owed 425 on their house, and I'm going to give them a loan for 559, they have plenty of money. So I'll pay off their 425 loan balance, and they will end up netting about 134. In other words, they didn't use all of their money to pay off their current loan. So that 134, what would you like to do with that, Mr. or Mrs. Homeowner? Oh, Ryan, I don't want to use that right now. Okay, I'll put it on the guaranteed line of credit. You can come back and get it whenever you want to. Use a little bit now, don't use it. Whatever you want, it'll just be there for the rest of your life. And that's pretty cool. So on they go. Starting owing remember they paid off the 350. They have 134 available. Every month they get a statement, it shows how much they owe, what the interest is, and they decide how to run their loan from there. What's happening today? Let's say a 75-year-old comes up to me, says, Ryan, I have a house worth 950. Cool. Well, based on interest rates today, your age and the value of your house, I can lend you about 400. Whoa. That's about a 42% loan to value. So 3 years ago, I would lend somebody 58% of the value of their home. Now I'm only going to lend them 42%. Drastic difference, about $160,000 difference. Not only is this person not getting their house paid off and getting $134,000 like it could have 3 years ago, I can only lend them 400. It means I can't even pay off their current mortgage. So I can't get them a reverse. There's no way to help them out here. And so I let them know, I'm sorry, Mr. or Mrs. Homeowner. With the way the market is today, I can't give you a reverse mortgage. I can't get you enough money for what you owe. And they say, but Ryan, my house is worth $950,000. I get, this is real time. I get this question all the time. Ryan, my house is worth 950, and you're telling me I can only get 400,000 on my reverse right now? I'd say, yeah, interest rates are high. And they say, geez, well, I asked them, what's your loan like right now? Because Ryan, I got a 3% fixed. I'm like, it's pretty good. You could refinance to a 6.5 or 7%, maybe on a conventional loan. They're like, that wouldn't work, Ryan. Either I don't qualify or I can't afford that increase in payment. How about a home equity line? Well, then I sold my first. I got a home equity line. That's Ryan. Those options just aren't going to work for me. So we've pretty much run the gamut now for a client. I go through this on a weekly basis with people. I'd say, okay, well, appears financing's not going to be working for you. What's happening with you? Ryan, I really need to get some of that equity in that house. I really need to get some of that equity. Well, if the financing not going to help you, you probably going to think about selling the house. And here we go and that runs. Yes, Susanna, you asked, is that 134,000 liquid on that line of credit? It is liquid. So now we have this client. I've told them, maybe you got to sell. Traditional financing, not going to work for you. You're welcome. Thank you for asking the question, by the way, Susanna. Okay, so let's go forward with this client. I say, you might have to sell your house. So the next thing now they got to think about is, okay, gosh, I guess I might have to sell my home. I'm going to be one of those 60% of homes being sold by a 58-year-old and older person. Ryan, what am I going to do here? So now I got to go out and get financing. You won't give me financing on the house I'm in. I'm going to get financing to buy a house. That seems even crazier. I'd say the power comes from buying a lower priced home because you get some of the equity out of your former residence to help with the situation. So we have this 75-year-old borrower. Now you as a realtor are saying, let's sell your home. Maybe I know this is not what you wanted, but this is what you need to do. You sell their home for 950. They are able to get 470, right? Because they've paid off their current mortgage and they paid the cost of selling the home. They got 470 in their pocket. I need to find something other than my 950 house now. We know that's just a little ways up to 15, right? $600,000 home. Okay, you're going from San Diego, maybe to Temecula. It's all there. This happens quite a bit. So this client finds a $600,000 property they like, and now they need financing. And this is where they're saying, Ryan, I couldn't get finance on the house I was before, but you're going to give me a loan to buy a home? Yes, I am. And this is how we're going to do it. We're going to do it with a reverse purchase loan. Again, I lend money based on age, value, and interest rates. The purchase price of the home is $600,000. Based on your age, I need you to put down $360. I will give you a loan for $240. So I've given you a loan for $240. You put down $360. Now you have your $600,000 home. Guess what? You didn't use all the $470 from the sale of your previous home. So you got $110 in the bank. Cool. You now have a home where if you need to skip mortgage payments, we don't care. If you just want to stop making mortgage payments, we don't care. Remember, we just add the interest on. So every month you just see your balance go up. But it's up to you on how to run your loan. You get to stay there for the rest of your life. If you got 110,000 now that you have in the bank, you can do whatever you want with that, invest it, make some money with it. So this is the scenario the client was hoping to do on the home they were living in, right? Get rid of a mortgage payment and put money away. Sorry, we just couldn't do it on that home due to the numbers and everything else, but we can do it for you in a downsized home. So this is the reverse purchase loan, and this is helping a ton of older homeowners that are just cash strapped in their houses right now. You know, the biggest reverse mortgage company years ago, they've actually been bought and they're not the same company anymore. But at one point in time, they had said that they were getting 100,000 calls, I think, a month, and only qualifying like 5%. So think about all our older homeowners. They're checking into financing. They're making calls. They're calling guys like me. And once I let them know where their position is, for some of them that think, I can't get a loan, I can't sell, there's no way I can get a house, they're sitting in their homes right now with not a lot of cash flow. And they need to know that there's another way to do this. Yeah, I get it. Maybe selling your home you've been in for 30 years is not fun. But you as a realtor, I think you know this too. So many times when people move from someplace they didn't want to move to into another place, they figure out sometimes just the fear of doing it all was the biggest thing that was stopping them from going to a different home. Not necessarily where they were living, the process of doing it. And so this stuff works really well for these older homeowners to get control of their cash flow again and put themselves into a home where they can be certain they're able to stay there the rest of their lives. So let's talk about qualifying for these reverse, because remember I said I can give people loans, but maybe they can't get into the loans. Maybe they got trashed FICO scores, 500 FICO score. Maybe they only got Social Security income, 1,200 bucks a month. How are you going to get someone a loan, Ryan, with a 500 FICO score, 1,200 bucks a month income? You're going to give a home loan. I am. I'm not. But FHA is going to help us. They're going to insure the loan, the money that we give, right? FHA insures loans. So we're willing to follow FHA's rules and lend money to people who otherwise might not be able to get a loan. Let's talk about underwriting a client real quick. If I come across a client, they got 550 FICO score because they were in bankruptcy or they've been late on their mortgage payments. They got all kinds of problems on their credit. Normal loan, forget about it. Me, different. I manually underwrite these loans according to FHA, and FHA's got a lot of rules I could use. So I'll say, hey, client, you got some bad credit here. Ryan, I know I got bad credit. Thanks for reminding me though. But yes, I have horrible credit. Well, here's how I want to help you. Do you have a reason for having bad credit? Or did you just say, I'm going to stop paying my bills one day? That's almost never the reason. Well, Ryan, this is what happened to me. Something with work. I don't have a job. I had to take my pet to the vet. Vet bills are expensive. I had to go to the dentist. Dentists are expensive. I had to fix my car. Mechanics are expensive. Water heaters blowing up. All kinds of, I found so many things that are disrupted and unexpected in retirement. And FHA says this, Ryan, if you can bring me a good enough reason and prove it, we'll erase bad credit. So you better believe I'm pretty darn good at coming up with reasons and helping clients figure out how to provide proof that something happened to them. And when I package it properly and I give it to FHA or an FHA approved underwriter, as long as I can get them to believe that that's a hardship, that FHA underwriter can just completely erase bankruptcies, foreclosures, everything. It's pretty amazing. So that is super helpful in our loans. Here's the other thing. Let's talk about income. I'm not requiring people make a mortgage payment every month, right? Sure, they could, but I'm not requiring it. So I'm going to have a different set of criteria again for income. So what I need to make sure is somebody has enough money coming in to pay their tax and insurance, keep the utilities on, and eat. Literally, that's my trifecta. You're not hungry, your lights are on, and you paid your taxes and insurance. Bingo, you got enough income, right? I mean, for me, as long as I can keep my cable TV on, right? Keep food in my fridge, I'm a pretty happy guy. So you got to say that we can figure this stuff out for older homeowners by just having a little bit of income. 1,200, 1,400 bucks a month, that kind of stuff qualifies us. Let's say that a client had really bad credit and they had no explanations. Or let's say they barely had any income, not even enough to pay tax insurance. How do we get them a loan then? I still have another way to get them a loan. FHA allows us to do this thing called life expectancy set aside. That's really a fancy, set of words for impound account. It means we're going to pay the tax insurance for a client, right? Because that's one of our main fears. They get a house, they have horrible history of paying bills, and they don't pay their tax insurance and they get foreclosed on. So that's one of our main fears. How do we remove that? If a client has no reason for not paying their bills and bad credit, we pay the tax insurance for them. So now we can get rid of bad credit with this. And what if people don't have enough money? Well, if we're paying tax insurance for them, that means they don't have as much income. So we got all these different ways, right? By the way, a life expectancy set aside, the impound account. Where do we get the money to pay the tax insurance? I'll tell you that we have to have equity in the house. Or if they're buying a home, they got to put down extra money to put more equity in the house, because we'll use a little bit of that equity every year to pay their tax insurance. If a client wants a reverse mortgage, they got to go through counseling. Why do they go through counseling? Because the government wants to make sure they understand how the loan works. So it's basically like a 35 to an hour phone call. Client sits on the phone, a nonprofit agency will talk to them, make sure they understand how the loan works, make sure the person's competent, and then they can get a reverse mortgage. So that takes about an hour over the phone, costs about 150 bucks. Sometimes it's free depending on if there's any money left from the government. So counseling has to be done. The idea is not to learn about underwriting reverse mortgages here. Idea is to let you know that, yeah, there's ways to get people loans when, man, it just doesn't look like they should have any loans at all. People asking about reverse mortgages, maybe in a situation where they're tight on cash. If you get involved with any kind of conversations or you find out people have reverse mortgages and you're not sure how to transition that into something that might be a business for you, you got to call this number. I staff it 7 days a week, and we will usually help you figure out who's in front of you, what situation they're in based on the questions they're asking, and how you respond to put it in a situation where if they can't get financing, which we know is a good chance, you can transition them into a listing. Maybe help them understand they can buy a house and have a house with no mortgage payment when they buy it, if they got crappy credit. So these things are very important to know. So anyways, that line is for realtors only. It's for us to help you push forward and get some business from all this stuff we're going to talk about today. All right, let's run through this real quick. Do we have any older people in America? Of course, I'm becoming one of them. I started doing reverse mortgages like, what, 17 years ago? And I remember thinking I'm doing loans for lots of older people. And now I'm thinking I'm in my 50s, right? I'm going to be my own client here pretty soon. It's amazing, right? I mean, oh, wow. Long, right? Anyways, 16 years. You've been in business probably for a long time, and you've gotten maybe gray hairs like I have being in business. So the point is we have a lot of older people in America. A lot of them, you know what? Not a lot of them have a lot of income, but a lot of them are homeowners. So going back to our very first couple slides, getting equity out of these homes to supplement our retirement is so important. And so the selling of the home, the refinancing of homes, and doing things with these homes is important because we need to get to that equity because our income is just not great in retirement. So just know, if you have an opportunity, if you remember the Pepsi challenge, you had to tell if it was Coca-Cola or Pepsi, right? And this is like the realtor challenge. Okay, you ready? If you had two homeowners that you were going to be able to talk to, right? And one of them, you've been told one of these two homeowners is going to list their home with you. Which one do you choose? I would choose the one with the grayer hair because that's the one that's probably thinking I might need to sell. Let's see, Susie, you had another question. Susanna, sorry. Does FHA only assist on credit with reverse mortgage, or if credit is bad when getting their initial first home as well? That's interesting, right? Because regular FHA loans for regular forward mortgages, like when someone's a first-time home buyer, I'm going to say there are some things in there that if people have bad credit that can help them get over regular FHA financing, but not nearly like we have for reverse mortgages. I mean, for reverse mortgages, FHA really has opened up to us and said, look, we want older homeowners to get financing. So we're going to really give you a lot of reasons, a lot of things you can do to help them get these loans. And yeah, even more so than regular FHA loans, do these loans have just tons of ways for us to help that older homeowner get financing. So yeah, so Susanna, the question is, answer your question is no, regular FHA loan is not near as liberal as these FHA reverses are. All right, so listen, where do we have most of our wealth at? You betcha, in our homes, right? And so this goes back to the thing I just keep repeating, right? I keep beating this thing. You're like tired of hearing me say it. We got to get to that equity. I mean, I have a ton of equity in my home, ton. I don't have nearly as much money in the bank. Right now, the way I'm heading, I'm going to be my own client here soon because it's just so expensive. I'm still raising kids. I still have my mortgage payment. I got so much equity in there, right? I'm just looking at it going, you're going to take care of me one day, equity. And that's what happens with a lot of our older homeowners. Equity starts taking care of us. And how it does it is any number of ways: selling the home, putting it in the bank and getting a lower priced home, doing an equity line, doing a reverse mortgage, doing all these ways. It's like our little, our little caretaker there that really helps out when we're older. And living in Southern California, where you and I live, we know one thing: equity just keeps coming. It's like, hey, you'll beat us down for a couple of years, right? But man, does our Southern California, California in general, not come back just amazing for all the problems or the things that people might say about California, good, bad, or indifferent? It sure pays to live here. Own a home and live here, I should say. All right, so what happens in the future of these reverse mortgages? This is something important for you all to know, right? Because there's some business here for you all. So when a client has a reverse mortgage and they pass away, the heirs can inherit this house. When a client has a reverse mortgage and they don't pass away, sometimes they want to sell this house. I'll get to that one in a minute. But the heirs, they need to get to this house and they need to sell it to get money. When a client passes away with a house has a reverse mortgage on it, this is what happens. The heirs need to inherit this house. They don't have to buy the house or do anything. They're inheriting it, but it does have a loan on title. So if they want to, if they're going to keep the house, they're not going to sell it. They got to refinance and pay us off. Simple as that. Go get your own loan, refinance, we're out. And we come off title. See you later. That's all we want is our money back. I would say probably 90% of the time in my experience, heirs sell these homes with reverse mortgages on them. They don't keep them, they sell them. And so that's opportunity for you. Here's something else. They can get a year to sell these homes. Do you know what? That year doesn't come very easily sometimes. So I'm going to help you to assist them so you get the listing from helping an older, not older, no, hold their own home, their kids inherit the home and get control of it more easily from the lender so they can list it with you. So they can get up to a year to sell the house without making a mortgage payment. That's good. But again, without having proper things in place, they're not going to get a year. I'll talk about that in a minute. The house upside down, let's just say we are in a situation where the market's crashed. Clients owe more than what the house is worth, and they pass away. And the kids are thinking, oh man, we had a reverse mortgage. It's upside down. That house is gone. Not really. As long as it's an FHA insured reverse mortgage. How do you know that? You see those 4 letters up there, HECM, HECM. It was earlier in a couple slides. It means home equity conversion mortgage. That's how you know you have an FHA insured reverse mortgage. And here's the deal with that. FHA says, look, there's been mortgage insurance on this loan. Your parents died and the house upside down. They owe $750, the house worth $700. Kids, we don't expect you to pay the upside down portion of your parents' loan to keep the house. We will actually write the check to the lender for not only $50,000 to get rid of the upside down equity, upside down portion. We'll also write a check for another $35,000. So that way you actually inherit the house with 5% equity. So you can, no matter how much your parents owed on a house that had a government insured reverse mortgage, you can always inherit it with equity because FHA is going to erase the upside down portion and then kick you a 5% on top of that. So not too bad for the heirs to be able to get control of the house. Now, for heirs that don't do anything, let's say they don't, whether the house has equity or not, they just don't do anything. They don't get a hold of us. This is what happens. So when someone passes away, the last person that was on a reverse mortgage passes away, we send a letter out. We say, hi, heirs, we understand the last remaining borrowers passed away. And you have 30 days to get a hold of us to tell us what you want to do. If you don't get a hold of us in 30 days, we're going to foreclose. So the heir needs to get a hold of them because if they don't, after that 30 days is up, we'll issue a notice of default. And after the notice of default, we don't hear from anybody, right? Because that's 90 days. We'll issue a notice of sale. And so now it's going to auction in 20 days. So if an heir doesn't get a hold of us or doesn't do the proper things to let us know they want to sell or keep the house, it can be sold in 140 days at auction, as opposed to 1 year if the heir did something different. If a house upside down and the heir doesn't want it, even though they get it written down, so it's not upside down anymore, they can inherit it with 5% equity guaranteed. If they don't want that, they can just have you short sell it. So at the end of the day, when a homeowner passes away, the last homeowner passes away, and there's a reverse mortgage on the house, the heirs can certainly inherit the house. They want to keep it, they just got to pay the loan off and get their own loan. If they want to sell it, they can list with you and sell it. With the house upside down, they can still get the house without it being upside down from that rule where FHA will get them 5% equity or better. So let's talk about how this works and where you could come in handy for an heir. When an heir inherits a house through reverse mortgage, they better have their stuff together. Because if they call us when we send them that letter, it says, remember the letter says, hey, heir, get a hold of us in 30 days so we know what to do. And we don't. Well, I'll put it this way. When the heir calls up, we look to see who the heir is it's calling. And if we don't have proper paperwork on file, we're not going to talk to the heir. And what does a proper paperwork mean? It could mean a lot of different things. When we do a reverse mortgage for a client, they can put the house in their trust when we do the loan. And if they put the house in the trust and their heirs or their kids are like the beneficiaries and trustees, and we have that trust and the house is in the trust, yeah, we'll talk to them. Easy peasy. But what if What if the family didn't have a trust and they did the reverse mortgage? Well, are they in probate? We're not going to talk to the kids. What if they did a trust after we did the loan and they're not in probate? We still might not talk to the kids because we never knew about the trust. We told the parents, don't change title without us knowing. And the parents changed title. They've now are in violation of the reverse mortgage. And even though they passed away, what if they put their kids on title after they did the loan? You could do that. But if they did it without us knowing, now we're angry again. So what happens is people do all kinds of things with their houses after they do these loans. Change title around, put it in a trust, take it out of a trust, put their kids on title. They do all kinds of stuff. And then when the parents pass away, the kids call us thinking that we're cool. And we're not cool. We don't know who you are. What if you're the bad kid in the family that was written out of the trust? You're not supposed to get anything, and now you're pretending like you're the best kid. How are we supposed to know that? What if all the kids have passed away and someone's calling us saying, "Hey, I'm the heir. I'm the next." We don't know, so we won't talk to anybody unless we have the proper paperwork on file. Which means what? A trust that was done and turned into us so we could approve the trust. If they changed title, they told us they're changing title and said, here, so we're putting on title, and they gave us the paperwork. They kept communication with us so we know we have the proper paperwork and they went through the proper procedures. Without that stuff, we won't talk to the heir and we can move to foreclosure. All right. So whenever you run across a house with a reverse mortgage on it, you really got to talk to those heirs or the borrowers while they're still alive and say, I've heard that FHA can be quite a bear to deal with. The servicer can be a real pain to deal with if your heirs don't have, or your kids don't have the proper paperwork in order. Have you reviewed with your servicer recently to make sure that you are in good standing? And most of them are going to say, I don't know. Yeah, sure. I did a trust. Well, you did. When did you do it? Like, why don't we take a few minutes, make sure your heirs are going to inherit this house nice and easily, because there's a high percentage of those heirs are going to sell the home. If you can help them out a little bit right now, you'll get helped out soon when that listing comes. So always ask people about their reverse mortgages when you meet them. How are you set up to make sure that your kids are going to get the house easily? Ask the heirs. Do you know what the reverse mortgage service is going to do to you if you don't have your paperwork in order? Okay. You want to ask them these questions. And then what? You call me and go, hey, Ryan, I found a person. They got a reverse mortgage. They're unsure of what they're doing. Cool. Let's set up an appointment with them. We will make sure their paperwork is in order. So that way, when something happens and they get passed away, they'll call you. The heirs will call you and say, my parents passed and I need your help again. All right. That's one reason why you want to talk to people with reverse mortgages. By the way, I'll give you software that shows you where reverse mortgages are at. That's helpful too. But let's continue on real quick here. So we've learned that we don't want the house as a reverse mortgage industry. Government bank does not want these homes. We want to get paid back. So heirs, come and get your house, man. Come and get your house and get all this appreciation or equity that's yours. Make sure you have your paperwork in order, though, so we don't have to hassle you. But otherwise, we don't want your house. We give you a year if you have your paperwork in order to sell or refinance, because we don't want to have to foreclose. We don't do a good job out of it. A lot of times we don't get paid back all the money when it goes to auction. So we'd rather have you step up and inherit your house. Yes, people with reverse mortgages, some of them are worried. Ryan, I get that. I'm surprised at sometimes how much I get this. I get calls or somebody will say, hey, Ryan, somebody told me that I might have to get a new reverse mortgage because I've had this one for 20 years. I've had this one for 15 years. I'm like, what? Where do you hear this from? There is no endpoint on a reverse mortgage. I had a realtor that was talking to a client, this is recently, and somebody had told her with certainty their reverse mortgage was done in 20 years and they're going to have to get a new loan. And I said, if it's just, that would have to be the strangest reverse mortgage ever, because our government insured ones are always going to be for a client's lifetime. All right. How do you get foreclosed on with a reverse mortgage? Because remember, you can live there, right, till you're 150 years old. It doesn't matter how much you owe. You can stay there. So how does a reverse mortgage get messed up? Well, number one, it's got to be your primary residence. If you move out of that house and you're gone for more than a year, that you're not supposed to do that. We send out something once a year to a client. If they don't respond to it, the clock starts ticking. They better get back there in a year. You only got to get back for one day to reestablish that it's your primary residence. So do it. If you don't pay your tax, insurance, or HOA dues, we're not going to pay them for you unless you have that impound account I talked about, that life expectancy set aside. We'll pay your tax insurance, but never your HOA dues. So if you don't have that impound account and you don't pay these, we're going to issue a notice of default. We're not going to pay your taxes for you unless you have it set up ahead of time. If the house gets in severe disorder, broken windows, shingles missing, yeah, we can foreclose on you. Somehow we find out about that, we will say your house is a health and safety issue. You got to fix that, or we'll foreclose because we can't have you living in something that's a dangerous situation. So that's the ways reverse mortgages get foreclosed on. A client has left the house for a year and doesn't want to come back. That could be if they pass away, right? If the heirs don't get a hold of us, we have to foreclose. Pay your tax insurance. I don't want to have to foreclose any of that. And keep the house in the condition it was when you got the loan, and you're good to go. All right. So to get a reverse mortgage, remember age, value, interest rates. If you have a client that's saying, I think I'm gonna get a reverse mortgage, and you're thinking, man, Ryan told me a lot of people aren't getting them right now, or a healthy percentage don't qualify. You might be able to tell right away if they're going to. You download this app on your phone. It's REV, the number 4 PUR. And this is what you download on your phone, and it calculates a reverse mortgage loan amount. Maybe you got somebody in front of you that's like, I'm going to get a reverse mortgage. I don't want to sell my house. Forget about it. And you happen to know how much they owe and how old they are. You put it in that calculator. Maybe they're like 62 years old. That's very young for a reverse mortgage. And maybe they have a house that's worth $1 million and they owe 400. You'd think you're shoo-in for a reverse mortgage, right? You only have 400,000, it's worth $1 million. Guess what? 62-year-old is very young. We're lending not much to a 62-year-old, maybe 32%, 33%. So that person might be able to get 320 or 330,000. They owe 400. You've just figured out on the spot. This client's not getting a reverse. I got to figure out how to handle this a little delicately because this might be a listing for me. So the calculator is designed for you to put on your phone. Download it. If you have a married couple, by the way, we're going to use the younger of the two. So you can have a reverse mortgage at 62 years old, and your spouse could be 52 years old. We're going to base the loan on the 52-year-old because we have to lend money based on the youngest age. If you want to do a reverse mortgage with your neighbor or your friend, that's cool. You all got to be over 62. So reverse mortgages, FHA's basically said as soon as the house is worth more than about $1,149,000, you can get a reverse mortgage on any valued home. But FHA doesn't want to lend any more money. They don't want to lend money on big, giant, or expensive homes. So since the house is worth about 1.14, they're not going to lend a bigger amount. They'll lend the same amount. So FHA reverse mortgages are really designed for houses 1.2 million or less. We have non-FHA reverse mortgages. This means it's not insured by the government, so the government doesn't write as many rules on these things. So we lend more money if somebody does a non-FHA reverse mortgage. But we don't do a bunch of them right now. The reason is rates got kind of high on these. These non-FHA reverse mortgages, they used to be about 4.9%. When interest rates kicked up, they're about 9.25, 9.3% right now. So in other words, the rates are a little higher on these jumbo reverses, if you will. So not as many of them being done right now. A regular FHA loan, those rates are somewhat close to what a regular 30-year fixed mortgage is. If you got a 6.75 30-year fixed, a reverse might be 7%, 6.9%. 7.2. So we're FHA reverse mortgage financing is fairly close to what regular loans are. But there is FHA mortgage insurance, just like a regular FHA loan. You got your upfront mortgage insurance, right? That's 2% of the value. So if you have an $800,000 home and you're doing a reverse mortgage, FHA is going to put $16,000 of more upfront mortgage insurance on your house. And then you have the 0.5% annual, because FHA has two components, upfront and annual. Annual is 0.5%. So FHA loans are more expensive than conventional loans. So someone will say FHA loans are expensive. Well, it's an FHA loan, right? Reverse mortgages are expensive. Well, if you're talking about the FHA variety, yeah, there's mortgage insurance on there. And that's how the reverse mortgages work. So heirs, when they inherit these home with reverse mortgages, they sell. The software I give you logins for, Title Pro, I'll talk about that in a second. There's a box to check. You can check right in your neighborhood who has reverse mortgages. And I'd say you want to know who those people are. You want to make sure that their paperwork is all in order so when they pass away, the heirs can inherit the home. It's in your neighborhood. You should for sure get that listing. Any house with a reverse mortgage in your own neighborhood, you somehow write them a letter. Maybe you know them already. let them know that you help people have reverse mortgages. More importantly, you help the heirs make sure that they can inherit the home. And you should be able to pick up that listing. People selling homes, older homeowners are selling homes right now because inflation is eating away at income. And when you're on a fixed income like Social Security or pension, it burns. Tooth work, $2,000, $3,000. Yeah, that doesn't fit into an everyday budget. So older homeowners are selling because they're feeling squeezed. Here's something else. As long as I've said you want to know who has reverse mortgages because you want to get the listing when the heirs inherit the home, you also want to know who has reverse mortgages because people used to be able to refinance. In other words, they're refinancing their reverse mortgage with a new reverse mortgage to get more cash out. Like in that other example, maybe they used $134,000 up. Remember in that first example that I gave them? And they're like, Ryan, I have no money in my line of credit. What can I do? I'd say interest rates are low. You've gotten older. Your house is worth more money. Refinance. I'll give you a new line of credit. Cool. We're doing that. A lot of those over the last 6 or 7 years. But guess what? Interest rates went up. It's not happening anymore. So a lot of people that have reverse mortgages have spent all the money and have their line of credit. And guess what? They need more money. So when you run across somebody with a reverse mortgage, you got two things you need to know. Number one, you ask them, oh, you got a reverse mortgage? Cool. How's that working out for you? They give a lot of money on those things, right? You're being a little cheeky because a lot of them are going to be like, no, I actually used up all my money and I'd like to get more, but I can't. And you might be able to say, look, a lot of people are in that situation right now. They can't refinance to get more money out of their house and they need it. So people are actually downsizing. They're buying a lower priced home. They're getting a reverse purchase loan. You can get money. You get another house where you have optional payments. It's all the same stuff. We just got to get you to a little lower priced home. Now, for some people, are going to be like, no way, I don't want to sell. Other people, you've planted a seed and you follow up with them. Because obviously older homeowners are selling their homes, and I'm seeing older homeowners with reverse mortgage selling their homes because they need to get more money. And so you got to know to ask those two questions when it comes to reverse mortgages. So check this out, Title Pro 24/7. It's software I use to figure out where we have homeowners, older homeowners that might be distressed, that are tenant cash, that might have reverse mortgages, because I want to know who has reverse mortgages in my own neighborhood so I can make sure I get a listing or right or no, or get to the heirs. So I will give you logins to Title Pro. You can ask it all kinds of questions. You can follow along short videos I have. These short videos, like I do one short video where and you just follow along with me, do the same thing I do. I train the software to tell me who is distressed and older within a mile radius. I take these flyers. These flyers are available on my website. They speak to an older homeowner that's in trouble or needs money. And it's a fun little marketing thing for your own neighborhood, right? You go on the software, you figure out who's cash distressed and older. These newsletters I wrote for you on my website, you can actually put your name on them. And they speak to an older homeowner that might be thinking they need to sell. It has articles in here like, how does Prop 19 work? How does capital gains work? How can I get a loan as a retired homeowner to buy another home? So 3 newsletters here, 3 articles. They're right on my website. Grab them, hop on Title Pro, follow my videos, lay them out on those doorsteps, man. Get some exercise. Really, what you just did cost you what, 18 cents? A buck? 50 cents? And you're creating a connection anyways in your own neighborhood, but you're creating a connection with an older distressed homeowner or a homeowner that has a reverse mortgage. So that way they know who you are. They know that you know about these things. It's a great way. It's a great door opener. So anyways, I have tons of videos on my website, by the way, of little door openers, little things that can help you use some of the stuff we talked about today to get some business, right? I didn't do hidden listings in reverse for nothing. There are listings out there and they revolve around older homeowners. They revolve around reverse mortgages. They revolve around what I've talked about today. Today's class is recorded. You can watch this video again. You can hop on my website. I give you logins for it. I have all kinds of videos. One of them is on using that software to find distressed homeowners. And then on the videos, you can watch a 2-part series. I go knock on the door because I like that kind of stuff. But I just want to see also how accurate my data was. I pulled 3 people out of software that looked like they were distressed. I knock on the door. 1 out of 3 was distressed severely. 1 out of 3? I'm not saying it's going to work that way all the time. But dude, if you could be at a 33% chance of somebody needing you, but that's all I would do every day. Obviously, it's not that great, but it does. It's the opportunity to be in your own neighborhood, knowing about the people that are behind the doors of your neighborhood. you have some new information that they might say, wow, I was thinking that, or I didn't know that, or yes, I do have a reverse mortgage and I do need more money. How did you know about that? Yeah, I put my house in a trust after I did the reverse mortgage. You're saying my kids are going to be in trouble. Like, you have this new knowledge you go out there that people will be like listening to you because you kind of know more than the realtor next door now. Well, unless you are the realtor next door. Okay. Anyways, y'all, there's business out there in reverses. I see it. I see it on a weekly basis. And so just familiarize yourself again what I went over today. That way you recognize when someone has a reverse mortgage, there might be something there. You recognize a distressed homeowner and what they might be looking to do. You call this number when you come across them. See if we can help you turn it into a deal. 888, that line is for realtors only. 714, that's my direct cell. And if you need to text me on a Sunday, you got a question, you met somebody has a reverse, get a hold of me. Let's see what you can do with that. You can't get a hold of me. Excuse me, if you can't get a hold of me, call the 888 line. I have very, very good staff that know what I do and they'll help answer questions too, or they'll find me if you really need me to. Anyways, thank you all for joining me today. Thank you, North San Diego County Realtors. With the fact that we know that so many older homeowners are selling their homes right now, we know it. That data is there. It's awesome you came to this class today because this is one of the things those older homeowners are thinking about. And now you've learned about it and you know there's some ins there. I want to help you with those ins. I want you, since I feel like the people that have spent an hour with me, I want you to get the listing more than any other realtor now. I want you to be able to figure out how to take information that may be a little cloudy when it comes to this stuff and find the verbiage, find the path to get the listing more than any other realtor out there because you spent some time with me today. You obviously know stuff like this is important and you need to be rewarded. Let me help you with that. Love to do it. I'm around all the time, by the way. I'm in Temecula, San Diego, the desert, LA, Orange County. That's my stomping grounds. You got something you need, you got a client that's hot, you're like, Ryan, I think this person will sell, but they need you. I need you there. Then I grab my keys, I get my car, and I'll see you there. Thanks for coming, everybody. If you have any questions, pop them on in there before I turn this thing off. I'm glad you lose. Oh, Susanna, you're my favorite today. I'm glad you learned a lot and keep it a little bit in there. Call me when you forget it all and I'll make sure it does something for you. Okay. Have a great day, everybody. Thanks Shirley for having me on if you see Shirley around. All right. Have a great day, everybody. Bye for now.